It's Beardsley with Lone Star Capital. Today I wanted to talk about, is it harder to raise money or to find good deals? And so as you know, in the private equity business, the business really revolves around two things, money and deals. And you need both to get deals done, and you can't have one without the other. So the question I get a lot from people is, I'm just getting started and I want to focus on one thing. Should I focus on acquisitions and finding good deals and then I can find partners? Or should I really focus on investor relations, build my network, and raise capital and then provide value to a transaction by being able to raise capital? There's a myth out there that if you find a good deal, the money will come. I want to tell you that's a myth, in my opinion. I don't believe that if you have a good deal, the money just magically appears. It takes a ton of work to raise money, even for a good deal. I've been there, I've had good deals, and it's always a struggle to raise money no matter who you are, no matter what you're doing, if the deal is good or bad. Raising money is arguably the hardest thing to do in our business and probably pretty much in any business. So can't take anything away from raising money. So I personally think raising money is harder than finding good deals. However, it depends what type of good deal are we talking. Are we talking good deal, like good enough for a syndication, good enough to get it closed, good enough to have a good experience for the investors, good enough for the sponsor? Or are we talking about unicorns? Are we talking about deals that really are in that 0.1% or 1% of deals that anybody who looks at, they can stress test the underwriting, they can be conservative, and the numbers still jump off the page, and an investor goes, oh wow, I need in on this. That is a super rare deal, and I would say harder to find than raising money. The reason being is it's just so rare, and also there's, I think, so much more randomness and luck involved in terms of finding that unicorn deal than there is in raising money. Raising money is very much a process, a program that you can start doing today, every day, and it takes little incremental movements every day of building your brand, reaching out, networking, communicating your vision. That's raising money. That's a straightforward process. It takes a ton of work and it takes years. Finding a good deal could just fall in your lap. But reproducing that good deal to programmatically fall in your lap every single month or even every single year is nearly impossible. I don't want to say it's all luck, because certainly there's things we do day in, day out to make sure that we're finding good deals. But seriously, those 1% deals that, yes, if you do have that 1% deal, then money is not an issue, the money will come. That's true. You'll be able to find a partner, either an institutional LP, a co-GP, a sponsor like ourselves that would be happy to dive into a deal if it really is one of those special deals. The reason being is, if you're an acquisitions person or you're out there hunting for deals and you find a good deal, well, it doesn't really do too many people a lot of good, because if you take me, for example, I would be less inclined to partner with you on that good deal because I can find a good deal and my company will do it ourselves, and we don't have to share the pie with you. We can just do it on our own and make more money. But if you have a deal that is really that good and it's a great opportunity for ourselves as sponsors and for our investors to really get into an amazing opportunity, then yes, absolutely, you'll be able to find partners like myself or other people who will be happy to make money not be an issue for you. But that's my take on it. I think raising money can be done more systematically, and therefore it is easier than finding that unicorn deal, because even if you work day in, day out, you might find one a year. But if you're talking about finding good deals versus raising money, I would say raising money is a whole lot harder than just finding good deals. It takes consistent communication with all the brokers in the market that you want to be in. I highly recommend being targeted and focusing on one market to uncover those good deals. But we're not talking about unicorns. That is also a systematic process. You can just be continually in the market. If you're underwriting 10 deals a week, putting out offers every week, you will get good deals. And that is a whole lot easier than raising money. So that's my ranking. I would say the very hardest thing to do, find a unicorn. The next thing hardest to do is raising capital. And then the third thing is finding good deals. I don't know, maybe it's a cheat answer, but let me know what you think. Do you think raising money is easier or harder than finding deals? How do you go about finding those unicorns, if that's even a part of your investment thesis? I know plenty of sponsors who, that's not even what they want. They don't want to trouble themselves with good deals. Like when I say good deals, I mean amazing deals. And there's nothing wrong with that, because that is a part of our company strategy, and we do chase after really good deals. And I'll tell you, it's a tremendous headache. When you talk about good deals, you're dealing with finicky sellers. They maybe want to sell, they don't want to sell. They're usually less sophisticated, off market, it's harder to get in contact. And then often there's something that goes wrong. You might think you have an amazing deal, but then you get in and do due diligence and you come to find out that there are some issues that actually, preclude you from moving forward with the deal, or you come to realize that it actually isn't the deal you thought it was. So those are the huge headaches associated with finding amazing deals. But let me know, like I said, how are you finding amazing deals, or if that's even in your strategy, and do you think it's easier to raise money or find deals? Thanks for watching.